Hey, welcome to ProsperiTrade. Thank you for joining us. Today we're going to be discussing day trading. So in ProsperiTrade, we discuss anything investing and trading related, and there is a difference between investing and traded. We talk about everything from day trading, swing trading, option trading, and we also do our due diligence on stocks for short-term investments, long-term investments, moat stocks or stocks that have the potential upside. Check out our DD on EXAS, a great stock where we had an oncologist come and comment and talk with us about the stock since the stock is cancer related. So that's kind of like the variety that we like to do. So today we're just going to have a quick short 10-minute video focused on day trading. So this is from our education package. So we'll just gonna kind of go over one pattern that I like to see. But before we begin, just please go over the disclaimer. We are not registered as investment advisors. Anything we talk about here is just for educational purposes. So really quickly, what's the day trade in reality? Are we getting rich like these YouTubers are talking about? Are we making millions out of a couple $100s? And the reality of that is an absolute no. The majority of day traders are not making millions, are not making hundreds of thousands. It's very, very difficult to day trade consistently and be profitable. You have to look at it not as a quick get rich type of investment. You look at it as the way I take it. If you have a smaller stock, a smaller portfolio, like if you have anything under 100,000, under 50,000, let's say under 50,000, the average person maybe starts off with 10, 20,000 to open up an account. You take that 10,000 and you invest it in the SPY or you invest it in a mutual fund or whatever, and you gain 10, 15%. So at the end of the year, you have a couple extra thousand. I am 100% confident that if you take a simple approach to day trading, pick a few patterns that you like. So I have just a couple of patterns that I wait for them to form. If they all fit my criteria and form, I'll take the day trade. And if I can do that a couple times a week successfully, I've constantly taken a $5,000, $10,000 account and doubled it. I've done tripled it before. So now, if you have like a bigger account, but my goal is to grow these accounts, to grow these small accounts, so that I can put more money into the long-term accounts, the long investments, the ones that are just going to consistently gain over time. So, for example, if I started off with a $10,000 account and at the end of the year I have $25,000, $30,000 from that, I might take half and put it in a stock like EXAS, a stock that I did DD on. A stock that when I talked about it was at 122 and is now at 133. So this is how I approach day trading. Just a couple of simple patterns, and these patterns I've tested them several times, and if they fit my criteria, most of them are successful 70 something plus % of the time, which is great in day trading. So I only wait for a few patterns, and I never chase. Now, why is it that it seems like all these gurus are getting rich? Well, there's a little dirty secret to day trading that people don't talk about much. And I know some of these guys, so I'm not going to name names. But some of these stocks that are lower floats, meaning the company only has a certain amount of shares circulating. And what does that mean? That means the supply and demand, right? So if you have a stock like Bank of America, there's over 1 billion shares floating. It's going to take a lot of stocks purchased to make that stock move. But some of these lower float stocks that are under 1 million, under 100,000, under 50,000, these guys have followers, thousands and thousands of followers. So they buy like 25, 30,000 shares, and then they alert that they buy, and there's a couple seconds delay, they're already in, and it spikes up, and I see them, I know them, they've told me this. While it's spiking up, they're hitting like, let's say, Control Z, some hotkeys, and offloading 3,000, 5,000, 5,000. And then if they see that more people are buying, they're going to buy again and sell while everybody's buying. And sometimes, if it starts dumping a little bit, they'll dump their whole position. They're profitable, and everybody else is left holding the bag, losing money, not wanting to sell positions because they feel like it's going to come back, and the majority of people lose except the guru. So you have to be careful. This is how a lot of these gurus make their money. So if you are going to day trade, pick a couple patterns, master those patterns, understand those patterns, then create an Excel sheet and maybe day trade or paper trade or trade with a couple hundred shares, just something really small, and look at the pattern and see how often that pattern works and why. What were the conditions? What was the market cap of the stock that you chose? What was the float of the stock that you chose? What was the time of day trading? Was it a volatile time? Was it a non-volatile time? So that's what I would do. I did that for years, till I just came to really like 3 patterns that I like. But today I'm just going to be discussing one pattern. So the pattern that I'm going to be discussing is pre-market breakout. So let's go back here. So pre-market breakout, if you're going to scan for this, I like, $1 to $10 stocks. I like a stock, you can set this in your scanner, a stock that's gap between 3 and 50%, a float that's under 20 million, a market cap that's under 75 million. Biotech stocks make big move regardless of float, so keep that in mind. So pre-market, before the market opens, the stock spikes up, then it settles, and first of all, I don't like it to retrace more than a certain percentage. So if it spikes up from $1 to $10 and then goes back to $2, that doesn't fit my criteria. If it goes to $1 and then it retraces to like $6 and then it starts bouncing between support and resistance all before pre-market, before the market's open, that'll fit my criteria. And I would purchase when the market opens if it breaks the pre-market breakout, okay? And we'll have an example, and I'll actually try to use a stock that traded today just to show you how it works. So this would be my entrance, and my risk would be this, the low, or somewhere in the middle here, okay? So this is how it would look. This is a real stock. So it spiked up here from about $4.25 all the way up to a high of $6. And you see it retraced, and this is the lowest point. So it retraced. So this is something I would scan for. I said, okay, look, it dropped below 480. That's still not super bad. It didn't give it all back. And now it's forming, it can't break this 540. Then it dropped here, 470, hit 540 again, 470, and it hit it again. So this is not an entry because it didn't break it. So here, it breaks it. I like that the volume increased here. And this is where I would take my entry, so 540. So if I enter here, about 545, let's say, my risk would be probably somewhere in the middle now. So I'm risking about 40 cents, okay? But I like that you have to make sure that the volume's increasing. It broke it out, and it didn't pull back. It didn't like tap it and pull back here, see? It broke it out. So you get in here, and then you kind of just hold it till it starts looking weaker. So, I probably would have sold it somewhere around here. I don't think I would have held it to all this, but, even if you got in here at 545 and just sold it for, let's say, 50 cents or whatever. Now, if you have 1,000 shares, that's $500. Now, if you can do that a couple times a week, that's you're going to beat the SPY. You're going to beat 20% per year. If you have a $10,000 stock and you're making about $1,000 a week, you're definitely doing well. But you're not going to want to trade every day. You're going to want to wait till these actually form, and they don't form every day sometimes. But this is how you should approach day trading. And let's see here. So look, okay. So I'm going to give you an example with stocks that traded today. So I pull out the chart here, and all right. So today the top stock was, let me see. Today is 311. Top gainer was ETEN ENTX. All right, so let's take a look at ENTX. Okay, so this is really good. So, okay, so this is where it starts here. Let me put here. So I would do the Fibonacci. Okay, so this stock here spiked up. Okay, so if I put if you put your pre-market scanner, for example, in the morning, you would see that spiked up here between 540 and 441. Spiked up, and it didn't give it all back. Like if it pulls back like here, like in this area between these two here, that's usually not a buy for me. So pull back here. So the entry, you probably would have gotten here, and this actually would have, you probably would have sold, you know. But if you would have stick to your rules of, for example, this is here, and this is just today's stock, so this may not be the best example, but here. Okay, so this is the pre-market area. So it didn't break here, spiked here, bounce, spiked, bounce. It broke here. So if you would have gotten in here, you know, and you would have watched this dip, you would have had to be willing to hold if you wanted your exit to be here. So maybe this is not the best pre-market breakout, but you can see the potential. But let's see another stock here today. Let's see NVFY. Okay. So this is an example of a stock that would have not fit the criteria. So it would have popped up in the scanner because look how much it spiked. It spiked all the way up here, and then look how much it gave back. Gave back more than, it didn't hold at least above the 75%, between 60 and 75%. So this is not a stock that I would have bought because I would have seen this. And even though there was opportunity here from 540 all the way to 8, big opportunity actually, it would have not fit my criteria because of how much it pulled back. You know, and this is where the discipline comes in. You have to be willing to stick to your rules and not feel bad that, hey, you know, I missed out on an opportunity. Stock here at 540, made it all the way to 850. It's $3 opportunity. You have to kind of stick to your rules and live with it. But you see, look, it just, the whole day it didn't trade well after that big breakout pre-market. Went all the way down to 430. And let me see if I can get one more stock. Okay, and the last stock here, FINV, this was traded today. Okay. So pre-market, it went from about $5 all the way to 636. So it would have had that 2 to 30% that I have. Then it gave back, you know, it stayed kind of like, it didn't drop all the way between the 60 and 75%. And we would have said that support would have been here. And we said this is resistance. So this is a beautiful one. If you would have put it on your watch list and you had this on your watch list and around this time, and you know, about 9 something in the morning, about 30 minutes before the market opens, you put it on your watch list and you ask for an alert at around 625. So if it hits, and then you look here, okay, it broke here, and you probably would have not gotten in, spike here, but maybe around here you could have probably purchased because you see like the big volume spike, big green candle here, okay, and maybe if you got in here, and how high did it go? All the way up to, and I'm not saying you're going to hold it this long, but you see the potential of making. So this is pre-market breakouts. This is kind of like one of my favorite patterns. When we talk about the next pattern, I'll be talking about ABCD pattern, and also buying dips. So this is just one of my patterns, and these are just examples of stocks that are traded today. I do have a lot more examples in our education package. And thank you for joining us. We hope to see you in the next video. Have a great day.